This is going to be the story of 2020, the increased amount of money flowing into private equity and what they're going to be doing with that. That's why I'm thrilled to say that joining me to discuss is Rebecca Gibson. She's a partner at Oakley Capital Private Equity. It's a private equity fund here in London. Rebecca, first of all, thank you so much for joining.
Thank you, Dani.
I should say that Oakley Capital just finished a fundraising round for nearly 1.5 billion euros. So this story of more funds is one you know very well. So what does it look like from your view? Is it realistic that these managers can continue to raise bigger funds? When does the party stop?
Thank you. Well, I think there's a number of factors going on here. Ultimately, there's a greater demand. You're seeing the big pension funds increasingly looking to raise their allocations into private equity because it's been a really successful asset class for them. And just yesterday, CalSTRS announced they were going to increase another 4% to the asset class. Now, that's another $10 billion. So there's some significant capital continuing to flow into the space. There's also, though, if you look back over the last sort of 12 years, we're only up 20% since the last peak in 2008 in terms of total capital raised into private equity. What you've also seen around that is a huge growth in the other alternative space, so private debt and infrastructure. So private debt has grown over 300%. So I think that creates a sense a little bit more that there is an increasing flow of capital into private equity, but actually it's across broader asset classes.
So across the board, but raising the money is one thing, be it private debt or private equity. What do you actually do with this money? How does it get deployed?
Well, you're seeing increasingly focused investment strategies within the funds. And at the upper end, where you get the big headlines around, a new fund of 20 billion or EQT about to raise 15 billion, that's actually opening up more deal flow in a size category of deals that wasn't yet addressable. You couldn't go after sort of Boots Walgreens, which was rumored last year. That was $70 billion. That has only been possible with these bigger funds as well as co-investment.
Right, and I mean, ThyssenKrupp, a story in the headlines right now, possibly
Exactly.
a more than $15 billion euro deal occurring.
Exactly. That would be the largest ever European private equity deal. So you're seeing at the upper end, the big mega funds are able to go after targets that weren't yet there. The smaller end in the mid-market, you're also seeing a lot of growth. Managers are looking for very focused investment strategies where they can unlock deals that may not yet have been thinking about private equity. So at Oakley, we have a very strong focus on finding founders, managers who've built up their own businesses and are looking for their first institutional capital. And across Europe, there still remain a large amount of that, particularly in countries like Germany and Switzerland, really attractive businesses that have grown to a certain stage and are looking for that first institutional capital in.
Rebecca, let's talk about some of the risks out there. Obviously, coronavirus is one that investors have been paying a lot of attention to and the possible economic impact of that. What does the view look like from the private equity world? Could we see deals perhaps falling apart because of the threat of the virus's impact?
Well, look, you can't afford to be complacent. It's clearly an issue that's affecting the world, and it's changing rapidly every day. Today, some rumors about infection rates are down in China. The market's up. In the UK, we've got increased patients, and so that's creating more of an area of concern. So no one's complacent, but it really depends on the sectors and geographies that you're focused on. And don't forget, private equity is a long-term investment. We're looking at a 3 to 5 year investment horizon. So we have the luxury, we can sit back and see, according to the particular company, what is the effect that might have, and you don't have to make a day-to-day trading decision.
So when you've done that, what does it look like in your conversations with current investments you have? Have you had to have, here are contingency plans, let's look at the supply chain. Are those conversations ongoing now?
Absolutely. I mean, you have to do that as an ongoing basis, making sure that you understand the risks that could affect your underlying companies. At Oakley, our business are typically high-frequency, repeat purchase or subscription business models with quite a long customer lifetime. So, for example, in education, we have a private schools group. We're thoughtful about that, but people are not going to pull their children out and change their education just on an impact of a short-term virus until they know the longer-term impacts. So what we focus on doing is really making sure that we're understanding the risks in our portfolio companies, but not making any short-term panic decisions.